In today's video, we will talk about, I can't believe this, Harry Dent says. The stock market crash is coming. Please like, share, and subscribe to our channel for future updates before watching this video. Let's start. Who is Harry Dent? Harry Dent is an economist, financial author, and speaker known for his market predictions and demographic analysis. He is the founder of Dent Research, a financial research and publishing company that provides analysis and forecasts on the economy and stock market. Dent is the author of several books, including The Great Crash Ahead, The Demographic Cliff, The Roaring 2000s, and The Sale of a Lifetime, in which he argues that demographic changes are a key driver of market cycles and economic trends. In these books and in his public appearances, Dent has made predictions about the stock market and the economy based on demographic trends and historical patterns. He has also made predictions about the effects of the aging population on the economy and the market, suggesting that the demographic cliff will lead to a market crash in the near future. He has a significant following of investors who look forward to his predictions and analyses. Also, he runs a newsletter in which he provides his prediction, market analysis and insights. Harry Dent's prediction about the stock market crash. Dent has argued that the stock market is currently in a bubble, driven by low interest rates and the Federal Reserve's quantitative easing policies. He has suggested that there is a coming demographic cliff as the baby boomers age and begin to sell their assets, which will cause the market to crash. Dent has also predicted that the market is set to collapse by a significant margin, with the Dow Jones Industrial Average potentially falling as low as 3,000 points. He also predicts that the crash will be followed by a prolonged period of economic stagnation, as the Fed will be unable to stimulate growth through monetary policy. It's important to note that market predictions are uncertain and subject to many variables. The stock market is affected by a wide range of factors, including economic growth, interest rates, corporate earnings, and global events. It is also affected by investor sentiment and can be influenced by speculation and rumors. Therefore, it's always advisable to conduct thorough research and consult with a financial advisor before making any investment decisions. Additionally, it's worth noting that Dent's predictions in the past haven't come true, and he has been known to be wrong in his predictions. Therefore, it's important to take his predictions with a grain of salt and not to base investment decisions on them. Scratch predicted that risky assets would sell in waves, with the first wave seeing U.S. equity markets drop 40% and the entire bear market stage amounting to a lack of 90% for the S&P 500, similar to what happened to tech stocks during the site air pocket bust of 1999. This will be the best mishap and the best downturn of your lifetime, and its larger part will happen undoubtedly in 2022, Scratch said. The whole mishap will be 80% to 90%. The essential mishap will be 40% to 55%, so fast, you won't see it. So if you clutch check and face that test, you will be hit very hard, and history is uncommonly clear about that. This crash will happen by and large due to the way that financial assets in Scratch are called the best air pocket of all time, from over support by the national bank. When it's prepared by the public banks, it's basically difficult to foresee properly, he added. A particular something in the occasion, it's a signature air pocket. Imprint's remarks come as the Fed released meeting minutes on Wednesday, stating that once asset purchasing fixing begins this year, the appropriate speed of bookkeeping report flood would unquestionably be faster than it was during the previous normalization episode. Monetary trades answered antagonistically to the news while store yields rose. This market correction in 2022 should be followed by a return with a greater impact cycle drove by the millennial age, Engraving said. He predicted that the entrance will be open by the end of 2023 or close to it. I've been anticipating that the following impact forever would be the new school graduates from 2024 to 2039. Not as long as the individual brought into the world after WW2's impact. And not as steep, yet rather we will see another impact following this. In the United States, additionally, more so in Asia, particularly India at the moment, China, and Southeast Asia. Regardless of how Scratch added that vault bonds should benefit the most from purging asset costs, all assets are in jeopardy, including gold. If you desire to succeed above average, you should purchase a 30-year Treasury bonds, which can increase by 40% to 50%, as it did in 2008. Gouge made the connection between the supporting properties of gold and vaults. Gold is a convincing extension support in the event of inflation. Store bonds, the best bonds, are conclusive breakdown support, he said. The mishap in money-related assets wouldn't be set off by a monetary rut. Going against the standard, a market decline would rush a slump, Gouge said. Right when people start selling those financial assets, overflow disappears and people caution more, and that causes the slump. The money-related asset crash truly sets off the slump, which happened in the 2000 mishap, he said. Gouge saw that one of the assets for buy during the recovery time of 2023 and past would be computerized monetary standards. Regardless of the way that he sees by far most of the altcoins as being in an air pocket as of now, Gouge's own belongings right at present integrate on a very basic level cash and land. I think the market has previously bested January 4th for the S&P 500. And we're going down, said Gouge. Also, the central bank will figure out that there's something for no good reason boost didn't actually work eventually. And individuals will find this out just when things crash. Albeit the financial exchange has done above and beyond the most recent couple of many years, Gouge said this is underhanded. Individuals are presently figuring it can go up, said Imprint. You need to get stunned out of that, you know? History shows a 40% crash inside the initial a while. He made sense of that. The central bank's cash printing has supported the economy as of recently. However, when the accident comes, it will be more awful than individuals naturally suspect. We're going to go into a downturn as of now. There's no delicate arriving here. The Federal Reserve is expecting that. They don't figure out the hidden patterns of the economy. We are so overextended, the greatest air pocket in all things. You can't make all the difference for a dead body. That is as indicated by Harry Gouge, president and pioneer behind HS Imprint. Scratch talked with Michelle McCory, Kitco News proofreader in Boss and lead anchor. Imprint thought that drawn-out U.S. depository bonds will be the best performing resource. He likewise believes that gold's cost will fall. Gold is a resource that has percolated, similar to all the other things. All monetary resources, that air pocket will crash. I would agree that in the following little while, gold will be down to $900 to $1,000 USD. In spite of the fact that Gouge sets that Bitcoin is the greatest air pocket. At this moment, he predicts a cost of a portion of 1 million to 1 million inches US dollars by 2037. As the economy recuperates, yet solely after it collides with the scope of $3,000 and $7,000 first. Bitcoin will be the new advanced norm, I think, for cash, said Gouge, bringing out the highest quality level. Assuming that we have this crash I'm foreseeing in the following 2 years, the main thing I'd purchase would be Bitcoin or Ethereum, emerging from it. With regards to the Ukraine struggle, Scratch made sense of that Putin was acting imprudently. Putin is being forceful, said Scratch. The world could go into a slump, and he could be faulted for setting off the slump, despite the fact that it wasn't actually him. I believe it's the passing of Putin. Putin has terrible timing here. Scratch said that the world will go into worldwide sadness, which could drive a tranquil goal of the Ukraine struggle. Where to invest? Harry Dent's investment strategies are based on the idea that demographic trends drive consumer spending patterns, which in turn drive the stock market. According to Dent, the aging of the baby boomers will lead to a decline in consumer spending, which will result in a bear market for stocks. To profit from this trend, Dent recommends investing in companies that cater to the spending habits of older consumers, such as healthcare and luxury goods companies. One of Dent's strategies is the baby boom investment strategy, which involves investing in companies that are likely to benefit from the aging of the baby boomers, such as healthcare and luxury goods companies. Dent also recommends avoiding companies that cater to younger consumers, such as technology and consumer discretionary companies. Another strategy is the demographic cliff investment strategy, which is focused on avoiding companies that are likely to be negatively impacted by the demographic trends Dent predicts. Dent suggests avoiding companies in sectors such as technology, retail, and consumer discretionary, as well as emerging markets, which are likely to be hit hard by the decline in consumer spending. It is important to note that Dent's predictions and strategies have been criticized by some experts and have not always come true. Therefore, it is important to conduct your own research and consult with a financial advisor before making any investment decisions. Additionally, it is also important to diversify your portfolio and not to put all your eggs in one basket. Markets have topped and will go on in a bear market until 2024, and the Fed can fail to address it. Please remember to like, comment, and subscribe to the channel, so you can be notified when new videos are posted.